By now, we've built a basic financial model: growth, revenue, cost of sales, expenses, salaries, and capital assets. Every number is in. The dashboard is showing us our cash, our burn rate, our runway. But there is the thing: a financial model on its own doesn't raise money. You raise money by knowing exactly how much you need, understanding what the money does to your business, and then going out and having the right conversations with the right people. First, understand what you need, then go and get it. In this episode, we are going to look at two tools that sits alongside the financial model rather than inside it: the fundraising section and the investor pipeline. Fundraising answers the question: how much do I need and what does it do to my runway? Investor pipeline answers the question: who am I going to get it from and where are those conversations right now? Let's click into fundraising first. This page connects directly to everything we've built in the financial model. It pulls in your revenue, expenses, and cash assumptions and answers the most fundamental questions a founder can ask before going to raise. How much money do I actually need, and what happens to my business when I get it? At the very top of the page, you will see the funding required section. This shows you year by year how much external funding you need to keep the business operating, based on your model oversee. Right now, the model is telling us that in 2026 we will need 84,000 and we are not profitable, similarly to other years, until 2030, where we don't need any funding and we are profitable. But don't mistaken that every single time you will see the same thing, because you may be profitable and still need funding. And below those year by year cards, two summary boxes give you the headline planning numbers. These numbers come directly from your financial model. Change your costs, change your revenue assumptions, change your hiring plan, and these numbers will update automatically. This is why building the model first matters. You don't guess how much to raise, the model tells you. On the left side of the page, you will find raising assumptions. This is where you tell the model what you are planning to raise and when, by adjusting those inputs. How much will you be raising? Let's say you want to cover 18 months of operations, so we would enter around 200,000. And when will you be raising? Let's say that's 1st of July 2026. Here is an important nuance. If you want to explore a scenario, see what it does to your numbers without committing to it, you can do that by simply not pressing save assumptions. Use it to model and explore. Press save assumptions only for the versions you are ready to share with investors, because saving it waves the raise into your fully forecast and adjust all the downstream numbers across the model. On the right side of the page, you can see the amount raised tracker. This shows you in real time how much of your target you've already secured. Right now it's showing 0 raised because we do not have anything in the investor pipeline yet, which is our next step. Once you set your goal, you will see the progress bar filled up. The percentage raised, how much is remaining, and the estimated cost dates, which matches what you set in raising assumptions, giving you a single reference point for when the round should be completed. This is the live connection between the two sections. As the investors move to the invested status in the pipeline, this tracker updates automatically. Below that, you will find the runway projections, and this is one of the most powerful outputs on the whole page. We see two numbers, side by side. Current runway, again 1 month, as it is mapping directly to the 1 month runway we saw in the summary dashboard, and post-raise runway, where it gets interesting. Once you enter your raising assumptions, this updates to show how many months you would have if your planned raise comes in on schedule. This comparison is exactly what investors want to understand. How long can you operate, and how does their investment change that picture? You can now answer both questions with one screen. And finally, the 60-month liquidity chart. 2 lines plotted across 5 years. The blue line is your current cash forecast. Watch it dip below 0 as your costs are running ahead of revenue, then gradually recover as the business scales. The green line is the post-raise forecast, the same business but with the capital injection shifting the trajectory upwards from the moment the money lands. This is a chart you can put directly in front of investors. It tells the story of your cash position, the impact of their investment, and when the timing of the raise matters, all in a single visual. No spreadsheets, no explanation needed. So now we have how much we need, when we need it, and what it does to the business. The next question is, who are we going to raise it from? That's where the investor pipelines comes in. Let's click into it. The investor pipeline is a CRM, a place to track every investor you are speaking to, researching, or planning to approach. And it feeds directly back into the fundraising section we just looked at. As investors move to invested and amounts are logged here, the amount raised tracker in fundraising updates in real time. At the top of the page, you can see the pipeline funnel. As you add more investors across different stages, the funnel spreads and gives you a live snapshot of where your entire fundraising effort stands at many moments. There are 3 ways to build this list. Add investor one by one using the form, import Excel if you already have a tracker in a spreadsheet, upload it and all your investors comes in at once without losing your existing work, or let the platform generate a suggested investor list for you based on your business profile. Most founders manage this in a spreadsheet and it quickly becomes a mess. Having it here connected to the financial model means it's always current and always in context. To add a new investor, click Add Investor button in the top right. A form opens with 3 clear sections. In the investor identity section, add company name, for example, Sequoia Capital, then investor type. You can choose from the list between angel, venture capital, and many more. Then add the specific individual you are speaking with under the person of contact. One of the most important parts here is a pipeline status. The pipeline status gives you a shared language for where each investor actually is in the process. The stages run from very beginning, like researching, not contacted, through send deck, in discussion, term sheet, and invested. Keeping this up to date is what makes the funnel at the top of the page meaningful. The second section is investment strategy. Investment criteria that in your opinion investors operate in and their investment focus, which in what sector they invest in. For example, agnostic, fintech, or healthcare. Matching your business to their focus before you reach out saves everyone time and dramatically improves your hit rate. The third section is next steps and engagement. This is where the pipeline becomes an action tracker. You choose what needs to happen next, send intro emails, schedule intro call, follow-up emails, and set a next step date. Every investor now has a clear next action and deadline attached to them. Once you save, each investor appears as a card on the page. Let's look at what we have here. Investor name, Sequoia Capital. Contact person, James. Then current status, in discussion. Amount invested is 0 and action required, send intro email. And the last interaction section at the bottom, where you can log notes and build a running history of every meeting, call, and email with this investor. You can filter the whole list by status. For example, show me everyone currently in discussion, or sort by last contacted to see who you haven't spoken to in a while. It becomes an active working tool, not just a list. So let's look how those 2 sections works as a system. You start in fundraising. Your financial model tells you need 200,000 to cover the next 18 months. You set that as your target and you set the date, and now you have a clear goal. You go to the investor pipeline, you add every investor you're speaking to, you track where each conversation is, and you log the next actions for each one. As investors commit and you move them to invested, the amount raised tracker is fundraising ticks up, the progress bars fills, then runway projections updates. And because both sections pulls from the same financial model underneath, any changes you make to your expenses, your hiring plan, or your revenue assumptions automatically cascades into funding required numbers and the runway projections. It's a live system, not a static document. In the next episode, we will look at scenarios, how to build multiple versions of your financial model depending on who you are talking to. A conservative case for a bank, an ambitious case for VC, a base case for your own planning maybe. Switch between them in one click without ever overwriting your work.